Well, good afternoon, everybody, and welcome to the Election Day coverage of Bull Sessions. My name is Mark Robertson. I am founder and managing partner of Manifest Investing. I'm joined here by Ken Kavula, who's probably stuck in data land. He's running around. He is joining us here this afternoon. Ken is from the mid-Michigan area where we have spectacular, beautiful weather for Election Day, and we're grateful for that. So good
I'm
afternoon.
back, Mark. And good afternoon, everybody. I'm back, and I was able to pull up Access on the SSG Plus tool and on the toolkit. So give it another try and just see what happens, okay? You might want to try to see if your toolkit is completely up to date as well. You might see if there's any patches out there that should be placed on your toolkit. I don't think I remember any, but you might see, Ann.
Okay, and we're also joined here by Kim Butcher from Florida. Good afternoon, Kim.
Good afternoon, guys. Just to let everyone know, I'll send a email address to Mark that he can post it in the forum. I have something of a website that is all thousands of free ebooks.
Okay.
Gutenberg.
Fantastic. And of course, that's a spoiler alert or a warm up to our Bull Library session that we'll close today's session with. And Hugh McManus is unable to join us at the start of the session. He's actually involved in one of his first actual day job meetings in months. So he got detained and he may join us late, but we'll hope that that's the case. Well, happy Election Day, everybody. We thought we would spend the day celebrating with some best small company stocks and a few good books. So that's what we'll do here for the next approximately hour or so. Most of you already know the drill. I see many familiar names, but I also see a few familiar names that are joining us for the first time. A big welcome to all of you. No investment recommendation is intended. Everything we talk about here, and we are going to talk about a bunch of current study ideas and suggestions. They are all for education, illustration, and demonstration. And everything that we do here is intended to fervently demonstrate the methodologies and philosophies of the modern investment club movement. From stock analysis to portfolio stuff to how do you watch a stock and how do you own it in a very intelligent and stewardship-like fashion. So that's what everything that we talk about here is all about. The session is intended to be informal. Kim and Ken are monitoring for questions. And we also make time for people, if you have a microphone on your computer, if you want to go audio. We do a monthly webcast at Manifest Investing and the Better Investing Mid-Michigan chapter known as the Investing Roundtable. It is always on the last, well, generally, almost always on the last Tuesday of every month, 8:30 Eastern Time. And if you would like to be added to a reminder list to receive an email, nkavula1@comcast.net. That's Natalie Kavula, Ken's significantly better other half. She will not inundate you with a bunch of emails. She won't bother you, but she will remind you when content is added and when an upcoming event is happening. If you have any questions or follow-up, Mark R. at manifestinvesting.com.
Mark, I'm just going to intrude right there. You're right. We almost always are on the last Tuesday, but because this last Tuesday is right before Thanksgiving, we're going to move the November roundtable to December 1st. So if you have your calendars handy, folks, just make a note. The November roundtable will be on December 1st, and then we'll go back to our normal schedule of the last Tuesday of the month for December and months following.
Yeah, we were figuring that it was running up pretty close to Thanksgiving with travel plans. Hopefully that people will have travel plans at Thanksgiving and stay safe, but that's the situation. Again, most of you are already familiar that we started these sessions a few months ago. It isn't purely intended to kind of kick around stuff that we are noticing or things we want to talk about. You never know where we'll quite end up. I thought today we'd spend a little bit of time talking about elections and stock markets. We'll also have a quick review of best small companies, couple footnotes about the COVID cancellation conference 2, that's Successful Investing 2. We'll talk about that here in a minute. We'll share our books, our favorite books on investing. We'll continue to do that until our library is full. I don't know about financial statement forensics if Hugh's unable to join us, but he actually does have some interesting stuff he wants to kick around with Tesla and the integration of the solar panels business and how that has kind of messed things up or distorted things at Tesla as just an example of some of the stuff that we've been kicking around. We'll try to, more than try, we will be covering all these topics at some point in the future, and we'll whittle away at this list as we can. Any thoughts or comments, Ken or Kim?
Seems like a lot for an hour, Mark, so let's get going.
Let's go. Yeah, we got a lot of stuff to do. Hey, there's a great article today in our footnotes, recommended reading materials at Manifest Investing in the This Week Update by Ben Carlson, where he talks about how crazy it is this time of year, especially for financial advisors. People trying to time the market, and every 4 years they get obsessed with the presidential moment, and they want to hide in cash or basically just do all kinds of crazy things associated with asset allocation, and it just doesn't make a whole lot of sense if you really look back at the facts and the data. This particular graphic was shared by Brian Westbury of First Trust Financial Advisors, and his point is pretty simple. I mean, you can look at the graphic yourself. If you basically try to invest only while a Republican is in the White House, or when a Democrat is in the White House and sit out the other time frames, that's what the blue and the red lines are. And if you just said, the heck with all that, I'm just going to find really good companies at good prices and stay with it, I think everybody here wants the black line, right? Any argument on that?
Not for me.
It just makes all the sense in the world to me, Ken. I don't know why people try to time these situations. This ought to basically slam dunk it for anybody who has that type of thinking.
Well, I have a relative, Mark, that has been convinced ever since I've known her that she should be able to sell everything and then come back and sell everything and come back. And I know she has a lot of money, but she doesn't have nearly what she could have had if she would have just left some of her investments alone, just let them compound.
Well, I'll tell you, in a shameless promotion, 2 weeks ago, we talked about my friend who 4 years ago, and it's obviously easy to remember because it was 4 years ago before the presidential election, her concern was that if a certain individual got elected, that the markets were going to crash. And, we basically were sitting around the bonfire and talked her out of it. Basically got her invested in the types of things that would be consistent with the modern investment club movement. And she's actually enjoyed about a 22% annualized return since then. And she's doing cartwheels. She does cartwheels around the bonfire now. So she's living the black line, not those other lines. Another thought that comes to mind, because I don't know what's going to happen today. There is some thought that the Oval Office will be recaptured by the Democrats and that the Senate might actually flip to the Democrats, and we could have a situation where the Democrats are in control of all three branches of the government at this point. And this slide basically says you don't even have to worry about that. I mean, it's probably one of the least attractive situations for investors, if you look back historically, to have a single party in control of the House, the Senate, and the White House, but it's still nothing to worry about. I mean, look at those numbers. And they're pretty much all green with a couple minor exceptions. So again, something to put in the hat of, geez, there's a lot of things you could worry about, like if the grocery store is going to run out of toilet paper again anytime soon, that have such a higher priority than worrying about this kind of stuff.
I have to let you know, Mark, that I got a call from my son about 2 days ago. He was standing in Costco watching people racing around him, grabbing paper towels. And he says, they only got about 6 left. Do you need any?
Well, I'll tell you the one that's been driving me crazy. I don't know if anybody else in the audience has been experiencing it, but we like Gatorade. We play a lot of tennis in this household, so we actually like Gatorade. There's been a run on Gatorade for months, and I don't know what to blame it on, but a lot of people out there drinking Gatorade along with the toilet paper hoarding. So we shall
Well,
see.
if you need some, just let me know. There's bukus of it here, but they even have the powder.
You've got Gatorade down there?
Oh, God, yes.
Okay, well, I'll see you in a couple months. We're going to come down that way in a couple months from
All
now.
right.
All right, so back to what really matters. This falls into my framework of what really matters. Many of you already know this, but again, I just thought I would take a moment of celebration. We have a model portfolio at Manifest Investing known as Tin Cup. And Tin Cup has actually been running since 1995. Everything shown here is since the start of Manifest Investing. And we put out a monthly new article that talks about the transactions in Tin Cup. So you can look at every single transaction that forms that blue line. But most importantly, it's been quite a run over the last several months. And we did top 3 million on October 22nd. We actually got up to almost $3,040,000 on the 23rd of October before we've gone through a hiccup and actually gone back south of 3 million right now, but we're pretty close to 3 million again. But $3 million, this is actually a demonstration showing what if you had invested the maximum amount that you could into a 401k since 1994. And it's actually a lot of fun to kind of watch these milestone $1 million moments fall by the wayside, and just kind of fun in general. This is the type of stuff that really matters. Find excellent companies, buy them when they're on sale, and hold them for as long as it makes sense to do so. That's what is done by those of us that are around here today. Any comments or questions, Ken?
No, but I love this graph, Mark. I just think it's the kind of graph that should be showing to every single 20-something in the country and saying, look, start young, be consistent, buy high quality companies, and then sit back at age 55 or 60 or whatever it is you want to retire and enjoy the good life then.
Yeah, I think back to some of our work done back in those days when we used to roam around the countryside, Ken, meeting with recent college graduates and watching them begin this journey. Had a room full of them one day that were barely contributing to their 401ks after having a little bit of a come to Jesus moment with this type of a concept. They all maxed out their 401ks. So a lot of good fun. All right, Ken, would you like to talk
Nick, I'm gonna answer you out loud so everybody can hear. Mark indicated that this graph here is from when Manifest first began, and that was generally around the end of 2004. But the actual Tin Cup portfolio dates itself back to 1994 when Mark was working for Better Investing. So this Tin Cup's been investing what you could put into a 401k ever since 1994. The graph is showing you what has happened since 2004.
And like I said, one of the reasons we graph it like this is every single monthly transaction can be gone back and looked at Manifest Investing that makes the blue line. All right. Ken, would you like to chat a little bit about our COVID cancellation conference coming up in
Well, I'm getting really excited about this conference, folks. I know some of the classes because I'm going to be teaching them with Mark. They are going to be not only entertaining, but are going to be just jam-packed with great ideas for you to take back home and consider thoughtfully, work with, talk to your partners about. We're going to celebrate the stock pickers to start with, and basically that class is going to talk about what you could do to use a contest, much like the Mid-Michigan Stock Pickers Contest or the Groundhog Contest coming from Manifest, how you can use those contests to generate more than enough ideas to keep you busy for the next year. Jumpstarting your portfolio with small companies will pull together all of the things we've been doing on small companies. We'll unveil the complete list, all as a single list of the best small companies for 2021. We'll tell you our ideology. We'll make sure that you understand that we don't hold some of our definitions as tightly as Forbes used to hold them, but we think you'll get a good kick out of the Great Small Companies class. Prove It to Me. Mark and I are going to talk again about the prove concept, show you again how it's calculated, and maybe talk a little bit about what high proof numbers mean, what low proof numbers mean, and what's the relationship between prove and par. Cy Lynch is going to do a great class on resources for verifying and validating a stock study. He's going to talk about all kinds of resources beyond the SSG to help you make sure that you have confidence in your SSG. And we're going to wind this up with a Let's Talk stock panel. We've collected some of the best stock pickers from the Better Investing community. Pat Donnelly will be there, Hugh McManus, Kim Butcher, Mark, myself, Cy. Have I missed anybody, Mark? I think
Herb Lemkool.
And Herb Lemkool, one of our directors from up north. It'll be a great discussion. Each one of us are going to come with our best idea, and we're going to have one backup idea as well. So join us for these classes. You can go to the Mid-Michigan part of the Better Investing webpage, log into BI, and look for just all chapters off to the right. It's a pull-down menu. Find Mid-Michigan in the Michigan section. And then once you get to our webpage, click on events. And suddenly you'll be able to see all of the descriptions, and you'll be able to register for one or as many of the classes as you'd like to have. We did this in May with a series of 5 classes, and we're very successful. And we hope to repeat the success, and we hope that you'll get as much out of it as you told us you got out of the May conference. So that's November 11th, 12th, and 13th. And the times are right there on the website where you can find the times. Don't despair, folks. If you can't come to it live, we will have them all posted in a number of different places where you can get to them. Everything is free. We are a nonprofit and don't believe in charging for something that doesn't cost us anything except time. So we'll give you our time. You give us your attendance. We'll have a good time, and we hope you'll learn something in the process. Thanks, Mark.
Yeah, I'll be out within the next day or so with a review of the stock panel suggestions from May, and needless to say, I wouldn't be talking about the way I would. I'd talk about them whether they were crashing and burning or not. They're doing fantastically well, and that's reason enough to show up all by itself. One last suggestion that I have. Some of you have heard me talk about this before. I get these every once in a while, and I just want to make a formal invitation. I'm going to make this in a couple of different places. One of my friends sent me a performance report from his investment club that basically shows that over the last couple of years, his club is outperforming the Vanguard 500, S&P 500, by 5.1 percentage points that you see right there in the center of the screen. I would like to invite people out there that are in investment clubs or even individual investors to consider sending that to me. And as part of that super investors, or whatever we're calling that first session, celebrating the stock pickers, we might consider presenting basically a pictorial, the same type of thing that we've done with super investors in other instances, but for that November conference. So again, I wake up on a Saturday morning, I open my email, I see one of these. Very few things give me as much joy as knowing that this is happening out there to you guys. So consider sending us that type of information. We will share it under the Witness Protection Program unless we have permission to do otherwise from you. All right. All right, Ken. Well, that's a good segue into, let's go ahead and talk about 2021, the results of the best small company list. And we are going to give those of you that have taken time out from your election day a look at the 20 picks for 2021. We won't spend a lot of time talking about them. We'll save that for the November session about a week from now. But Ken and I are kind of thrilled with this one. And as the saying goes, it ain't bragging when you're doing it. And I don't want to jinx us, Ken, but we do have 6 years in a row. And those numbers are pretty cool. And for those of you that have been around for a while, you know that we used to follow the Forbes Best Small Company list going back into the, I want to say in the late 1990s, if I remember correctly. And they actually abandoned that back in 2015, and we kind of took it over. And I think we better than took it over. I know that's not bad. I know that's bad grammar, but it's okay. There's no English teachers here. No, we basically switched the methodology, and we'll cover this in great detail again a week from now. But we switched the methodology to we want to find the best small companies. In other words, we want to find excellent companies with high quality that are well positioned for future returns. And that's what we've been doing over this 6-year period. And I'm pretty happy with those results. How do you feel about them, Ken?
This was one of the most exciting times to pick the 2021 companies that I've had in a long time, Mark. Mark basically gave me a boot camp introduction to his new data source. Is it called Y charts, Mark? Is that what it's called?
Yes, for the data, yes.
The Y charts data. He gave me a from the ground up introduction to what it was, how it worked, and what we could do with it. First of all, I'm just amazed that we can now drop the holdings for almost any ETF or almost any fund right onto a spreadsheet, drop the holdings, get the prices, and find out what percent of the whole portfolio just various holdings are. That in and of itself is just miles ahead of what we were able to do 2 or 3 years ago with funds and with ETFs. So now we could be able to look at hundreds of sources for ideas for small companies. And not only that, but some of you are getting really good at sending us ideas as well that we put through the chopper and do the discussion on. And that allowed us to do a lot more discussion too about why were we going to keep a company on the list, and more importantly, why did we decide we were going to eliminate it from the list? We did not want to come up with 100 companies where 70 of them were really not as good an idea as they should be. We wanted kind of a focused list, 20, 25 companies, and we wanted to make sure that we could give you ideas that were actionable and that would make you think. We're not going to tell you that every single one of them is a great idea, but folks, here's last year's list, and you can see that about half of them ended up positive in the market and about half negative, and maybe 40% of them look like they beat the market by that more than, they beat the market, let's put it that way. Whether it was nothing or whether it was an awful lot of percent like Etsy. I don't think either one of us looked at Etsy when we put it on the list as something that was going to do what Etsy finally did last year. Neither one of us had ideas about that, did we, Mark?
No, and in fact, I would go a step further and say, if you put these 20 companies in front of me a year ago, the last one I would have looked at would have been Etsy. So that's something for you to think about. And in fact, PaySign would have been one of the first ones I looked at. So you have to have a different mentality for these companies sometimes. And
I do think both of us gravitated pretty quickly to biospecifics.
That's true.
And that turned out to be a big winner too.
But I was
I'm
really
gonna,
concerned about Wingstop.
well, we always have problems when we put a restaurant that seems to be popular on the list, and Shake Shack is down there to kind of balance out Wingstop. Sometimes these restaurants that are popular do fantastically for us, and sometimes they just kind of give us an issue. I remember that one of the years Popeyes ended up at the very top of our list, and that again would have been a company that either one of us probably would not have discovered or talked about very much. But here's last year's. Are we going to tease any of this year's list, Mark?
Yeah, I mean, there aren't that many repeats. We're going to carry over biotelemetry. Kim will be glad to hear that. And there's a couple others that probably make it. But Cantel Medical finished at the bottom of this list for the third straight year. I was actually kind of relieved that it didn't end up on our short list, Ken, because I'm not sure
Yeah,
what it was.
and Mark, it's just this idea about investing, period. Just when you think you have it figured out, that rule of five just walks right up to you and beats you on the head. There's always stocks that everything looks perfect for. The visual analysis looks wonderful. The profit margins are great compared to the rest of the industry. The PEs are reasonable. Everything just lines up the way you would love to have it line up, and yet it just does as poorly as it possibly can in the market. And Cantel's been one of those now for what do you say, 3 years? I was thinking it was 4, but maybe it's only 3 years.
I might be blocking out the fourth year just because I'm exhausted. All right, so let's go.
Our big model club owned Cantel for about a year and a half before we finally gave up and just admitted we did not understand the company. We didn't know why our SSG kept saying one thing and Cantel kept performing the opposite.
It happens. All right, so let's go ahead and do what everybody's here for. Let's talk about the 20 companies we've selected for 2021. And these are their average characteristics. So this is who we're voting for in 2021. The average sales growth forecast checks in at almost 18%. The return, we like these numbers. The projected annual return, PAR, comes in at about 20. This is a big number, Ken. I mean, we basically have been saying for the last several years that you do not have to settle for roller coasters, that you can find. In fact, when Ken and I were talking about setting up this year's list, we said we'd like to find 15 neogens and 5 exciting Hugh McManus companies. And that's what we mean by that. You can find up, straight, and parallel. We're going to show that to you here in a minute. The average projected return on value, also very strong. The average number right now is about 7%. So that's tracking in a really nice place for the projected return on value. On the relative strength index, this is actually up 10 points in the last 2 days because our stocks have been hot. In fact, I was joking with Ken before we got started. We've already had a good year. Our stocks are up 5%. The 20 stocks that we're going to show you are up quite a bit already. The average Irish Spring position, right in the middle of the range, that's the position of the company's stock price with respect to its 52-week low versus its 1-year target. So a company that's trading near its 52-week low will be closer to 0.
I think that's up a little bit since last week as well, Mark.
That one is too, yeah. And the average Morningstar price to fair value, this one I'm not that concerned about, but they consider the 20 stocks to be collectively on sale. Probably more important to me, the analyst consensus estimates for the price to fair value is a little bit better, suggesting that the stocks are 20% on sale, and they actually have a 1-year, and they're all over the map, but they have a 1-year total return forecast of 47%. So that collective, that look at the average company in the 20 is actually probably one of the stronger ones. We're probably doomed for bad results this year, Ken.
Don't talk yourself down, Mark. Don't talk yourself down, Mark, okay?
Okay, I'll just knock on wood and be happy. So here we go. Here are numbers 16 through 20. Some of the companies that we favorite: Auto Home, ATHM, Fabrinet, FN. MKS Instruments, MKSI, and Biotelemetry. Go ahead and cheer, Kim. Both
Yay!
MKSI and Biotelemetry are roundtable selections, so those are going to be familiar. And then ACM Research is one of those that Ken is fascinated because of all the fancy semiconductor equipment stuff and lasers and all that kind of stuff. So those are the companies that make up the last 5 on the list. We did rank them by that owner's projected return on value. So they're all double digit, all of them. You will find that they are all double digit growth. Most of them are greater than 12% with a couple minor exceptions. You see the excellent quality ratings. You can see that the individual relative strength indices for all the various stocks, and then those other characteristics that we've talked about. Some of them are a little bit crazy. I don't think these guys are right about this one. Be kind of interesting to see how that goes. But what are your thoughts? Any personal favorites here, Ken? And then this slide's for you, Ken. Take it away.
Wait, this slide here is for me?
Yeah, because look, I mean, this shows that a small company.
Okay, I know what you're talking about. Yeah, I do like a couple of these from the bottom, but not nearly as much as I like a couple that are a little bit higher up. But I guess this goes back to a conversation Mark and I had about, maybe as much as 8 or 9 years ago. We used to do a lot of driving to visit you folks in person. I hope we can get back to that before I get so old I can't even get in a car. But we used to talk a lot about small companies, and I really do think when I first knew Mark that he wasn't a great fan of small companies, that he always thought there was going to be a lot of risk involved, a lot of unknowns, and I kept saying, just ask for the same things from your small companies as you ask from your large companies. I don't know the graph on the right-hand side, the sales and the earnings graphs. I'm not quite sure what stock they go with, but you can't ask for any better than up, straight, and parallel on those particular graphs.
Well, the one
I would love that company to start with, whether it was a small company or a medium-sized company or a big company. So what is that one, Mark, on the right-hand side there?
Well, first of all, there's a backstory to the small company story. I'll tell it someday. Remind me someday, I'll tell it. Well, the one on the right there is, now, many of you in the audience are not going to believe this, but Ken Kavula is allowing a Chinese company to be among us. And that one happens to be AutoHome.
They don't make pork, though, Mark. They don't sell anything to do with pork.
We're not going for Chinese pork. No, AutoHome is basically the Chinese version of, in my household, it would be Uconnect. In Ken's household, it would be OnStar. OnStar is not a word that we allow in our house.
OnStar is GM. It's Sync, Ford Sync.
Ford Sync, okay. Well, it's all those things in China. So that's what the company does. It's about automobile content and GPS and all that kind of stuff. So pretty good looking guide. And again, if you didn't know it was a Chinese company, you would be less biased and more attracted to it. But again, 2 roundtable stocks on there and some pretty good companies in our world. Here we've gone ahead and added the next 5, numbers 11 through 15. And some pretty decent looking companies. Malibu Boats actually won the Battle of the Marina. There were 2 or 3 recreational vehicle companies that ended up on the short list, and Malibu Boats came out ahead by virtue of its double-digit growth, decent looking returns, excellent quality, and just generally pretty positive characteristics. Intelligent Systems, INS. We'll be sharing more information about that one. Vertus, Eagle Bank Corp, and Western Alliance. And I'll kick us off by just pointing out that Vertus Investment Partners, you see the description there. Vertus is actually the investment advisory company that is responsible for one of our favorite small company funds. And that would be the Vertus KAR Small Company Fund. And that is actually the top ranked mutual fund that amongst all the mutual funds that we follow that has a track record of greater than 10 years. So the Virtus KAR, that fund is a source of ideas for us investing wise too. What reaches out and grabs you on this one, Ken?
Well, I think, Mark, when we first looked at the lists that came from Forbes, one of their rules was absolutely no banks, no asset-based companies. And they were very strict in keeping banks off the list. Mark and I did a lot of debate. We've been debating this idea the last 2 or 3 years, and finally decided that banks are something that you need to take a look at right now. The Federal Reserve, with their low interest rates, have basically made a lot of banks really scramble for any kind of profit they're going to have on their balance sheets. And as interest rates eventually start to rise, and they're going to rise, banks are going to prove, I think, to be a pretty decent investment. We own Western Alliance in one of our investment clubs, and find that the growth is spectacular. The metrics we use to measure banks are really top notch, and we decided that Eagle Bancorp has numbers that come awfully close to those of Western Alliance in both directions. So for the first time, we're including a couple of asset-based companies on our list, and we do think that they have the potential to be big winners going forward.
Yeah, and I would just point out that Eagle Bancorp is among Eddie Elfenbein's favorites. And if you're not familiar with Eddie, I believe that Eddie should be an ad hoc, or what do they call him, adjunct member of every investment club. You can read all about it at crossingwallstreet.com, all one word. And Eagle Bancorp is one of his favorites. All right, well,
Mark, I'm gonna unmute Nick. He has his hand up, and we'll see what his question is.
Okay.
Nick, you're self-muted, so you have to unmute yourself, Nick.
Great, thank you. Mark, this small company list for 2021, is this the first year that you used Y charts to compile the information?
I think we were just getting started a year ago, Nick, and so yeah, it's really the first year that we've sunken our teeth into, especially on the fund, FUND side of things. So that's definitely true.
Okay, thank you. Thank you very much.
All right, so let's go ahead and look at numbers 6 through 10. And we were talking in the green room before the session got started about number 6 on the list there, Axos Financial, ticker symbol AX, the old bank of the internet. They check in with some pretty interesting statistics. They've been beat up a little bit over the last few years, but it's been a little bit of a subtle community favorite in our community. MiTek Systems, which I actually don't know anything about, MITK, but I'm certain that we will know a little bit more about it. One of Ken's favorites, LGI Homes, LGIH. There's a couple home builders in the mix. Form Factor and Emergent Biosolutions. What are your thoughts on these, Ken?
I will tell you that my wife owns LGI Homes in her IRA. We've owned it for about a year. Been very pleased with the performance, and I think I've been telling a lot of you at different venues where I've appeared that I really think the home story, the home single-family residential construction, is something that's in place for the market for maybe the next 8 to 10 years. I think that a lot of it has to do with low interest rates right now, but I think a lot of it's going to be driven by the number of people that are coming to age and looking for their first or maybe second home at the present time. LGH does build a lot of starter homes, but they also build homes in other categories. Very interesting company to take a look at. I also own FORM, Form Factor, in my IRA. I just think it's an unknown semiconductor company that has an awful lot going for it. It seems to play in the spaces that the really big companies don't like to play in very much. again, an extremely interesting study, and I'd urge you to take a serious look at it.
The one that kind of jumped out at me was Emergent Biosolutions. I'd never paid much attention to the company. I'm really kind of fascinated by that low 58 number. And in fact, I threw this one on a picture for you guys because Ken and I were scratching our heads wondering what this company is all about. And I think you can see from the visual analysis that that's pretty solid and more solid here in the last this year, and the outlook going forward. These guys happen to be very integrated into the, I'll just call it a task force, the task force that is attempting to solve the COVID challenge. They're headquartered in Gaithersburg, Maryland. They're working with the military and healthcare complex. The interesting thing about these guys is they have a number of solutions that are leveraged with companies like Johnson & Johnson and at least 2 or 3 of the other people. They're pretty well, I don't know what you would call it, distributed, horizontally integrated into that effort. And I think, as you can see here, the expectations are fairly robust. Anything you want to add to that, Ken?
No, this is an unknown to me market. It's one of the ones that I'm going to be studying going forward.
Yeah, and frankly, full disclosure, if my detailed study and Ken's detailed study works out on this one, pretty sure I'm going to own this one, because these guys are leveraged in it. It takes me back to the days of the first televisions, and Tom O'Hara used to talk about how you could invest in RCA or any of the other emerging television companies, or at the time you could have bought Corning and made a mint, because they were going to win no matter who won the television wars, because they sold the tubes to all of them. So these guys are kind of leveraged across multiple COVID solution platforms. All right, so let's go ahead and talk about the last 5, or the first 5 basically on the list, starting with Global Cord Blood, another Chinese company. We did allow 2 Chinese companies into the mix. This is kind of a strange one. We've covered it a little bit at Manifest Investing. They actually are a blood bank. They actually also do some other stuff in China with respect to developing solutions from umbilical cords. So kind of off the beaten path for us. eHealth, EHTH, one of the weaker performers so far for us, but we're pretty optimistic. The other home builder that made the list, MI Homes, MHO, another one of Ken's favorites. Ebix. Ebix is a company that kind of dominated some of our discussions, I want to say 10 years ago. It's back. Essent Group, ESNT, is in mortgage finance. And again, I think that leverages into the strength that we're seeing in home building. So again, these companies are chosen based on their characteristics, their growth rates, their quality, analyst expectations, all of that stuff, but they do happen to fit many themes that are going on right now. Your thoughts, Ken?
Well, you might notice in the sales column, folks, that we've stretched our definition for small up to around, just under 3 million. We do think that in comparison, especially with the people that they're competing with in their industry, that MI Homes and LG iHomes are the smallest ones that are publicly traded and that are have a large regional footprint. So we did stretch a little bit. I think there's one other one that we kind of, there it is down there, MKSI, we're over 2,000 or 2
billion
and 2,000 thousands or 2 billion. So I really, we're not trying to slap you in the face with a lot of rules and everything. We think that compared to the people that they compete with, these companies are definitely small. And if we're using our growth rate definition to define small, then there's an awful lot of these sales growth rates that are in the small camp right now that we should be considering. So it's a great list. I have about 14 of them that I want to study going forward. That's just because I know about 5 or 6 of them already. But I would urge you to take some time, spend some time. These are not going to be as easy to find information on. Nobody's going to give you guiding numbers from a Morningstar analysis or from a Value Line full analyst report. You're going to have to do some more thinking, and you're going to have to do some more deciding of thesis, deciding what would make this company successful going out into the future. You know, that's our favorite story about Warren Buffett sitting back and drinking a cherry Coke and saying, what do I think this company will look like 5 years from now? And just making that a complete thought process. You're going to have to do that in some of these small companies. And I urge you to take the time. And it's a lot more pleasant if you try to do that with a couple of partners, maybe a relative or an investment club partner. I apologize for all the noise in the background. We have gardeners, and they've decided to come today and cut our grass for the last time and clean everything up. So
I feel better.
I don't want to do it, so I'm not telling them to leave. Okay.
I feel better knowing that Roxy is keeping you safe.
She is.
All right, so there's your 20. Well, obviously, we'll have more details on all of these. I do think we should make a sacred pact that if you actually assume personal ownership of either of these Chinese companies, we have to fully disclose that to the community so that they can short those companies.
If I buy either one of them, yeah, I'll tell you so you can short them, folks.
So
Okay.
we can bail out and whatever. All right, so let's go ahead and talk about some of our favorite books. We've got about 10 minutes to go here. Over the last couple of bull sessions, we have talked about the ones that are shown on the screen there. Again, these are books that we have found informative, influential, or inspirational to any of us, and just kind of a recommended scratch your head reading list going forward. This week, let's go ahead and start with Kim. These are 2 books that I have never seen, and I actually have never heard of them before, but I'm intrigued. Go ahead, Kim.
Okay. Maurice Scheller wrote a lot of books, but he did a lot of analysis of stocks that if your SSG looks really confusing and it could be a stock with a special situation, they give you a lot of guidance of how to evaluate a stock, and they have some actual practice and studies of it in there. Now, one of the things I found out for myself is I was snooping through the Value Line at my local library. It turns out that Value Line has a special situations newsletter. And that special situations newsletter and using these books gave me a lot of guidance, and let's just say it's been profitable. This is kind of like when you have the small cap list that Mark just presented. You have to do a lot of thinking on your own, and you got to get into the numbers of seeing what's going on. So they give you a heck of an awful lot of guidance, and they're great reference materials for me. So I just thought this would be one of those things that would be great for all of you to be aware of.
Okay, yeah, I'm intrigued by the case studies. I want to take a look at these books, and it's always good to better understand these type of situations. Here's Ken's pick for this week. He actually said he had like 20 of these, 20 books.
I have a shelf in my library devoted to either books by Buffett or books about Buffett, and this is one that's not on my shelf. Mark says it's a really interesting read, so it's one that I'm going to put on my list and try to get. And when I find a couple of spare moments, looks like COVID's around for a couple of months at least, so that'll give me some of those spare moments. I'll try to get this read as well.
Yeah, one of the things that I was telling Ken in the pre-session in the green room is that I'm pretty sure, I read a whole bunch of Buffett stuff for one of our national conventions a couple of years ago. This allowed me to kind of reconstruct some of his early days, the 1940s and 1950s, and some of the stuff that he did as he formed the Buffett Family Partnership, which was basically an investment club, by the way, that ultimately became Berkshire Hathaway. And this one detailed many of those transactions, so I found it to be most interesting to see those early days. Here's my pick for this week. The title of the book is Winning the Investment Marathon. It's a little more obscure. It's by a guy by the name of Brad Perry. Brad Perry was the understudy of David L. Babson, one of the most powerful contributors to the early days of better investing. David L. Babson and Brad Perry, until just a few years ago, contributed articles to Better Investing. I actually worked with him directly. In fact, I may have a little bit of bias here. Shortly after this book came out, he was in Detroit for a financial analysts luncheon where he gave the keynote, and afterwards we spent a couple hours sitting around the table just chatting about investing, and so I have a real personal connection to this book. But it's an easy read. I read it in one sitting, literally sitting down and reading it. It just a whole bunch of common sense from somebody who has successfully interfaced with investors for 4 or 5 decades. And as you can see there, he provides some information based on some of the things that you might want to imitate by some of the giants of investing, and how to look at stuff. Right down the middle there, you can see that the emphasis of David L. Babson and Brad Perry and the Modern Investment Club movement has been to identify, discover, and find excellent growth companies, buy them when they're on sale, and own them for as long as it makes sense to do so. It's really that simple. And this book helps with that effort, and it's written in a real folksy, friendly manner. It's not real. It's not the book that we mentioned first in line, The Intelligent Investor, which can be kind of heavy. It's not Life After Google, which is really, really heavy, but a really great read. But it's the opposite of that. Good, entertaining reading. So with that, we'll just go ahead and close down. I wanted to remind everybody that we do share these sessions on the YouTube page, Manifest Investing. If you just search for Manifest Investing, you'll find that all of these sessions are archived there. Please consider subscribing and click on things that you like so that we know what to talk about more often. But you can see that, yeah, even our Halloween stuff is already up there in last week's session. And I'll just close down with The Great Pumpkin Rising. For those of you who don't believe in the Great Pumpkin, you're wrong. The Great Pumpkin does exist, and I saw it just a couple of days ago. And I thought that picture was kind of cool. So with that, I think we can go ahead and shut down. Did you have any closing comments, Ken?
No, I think that we'll grab a couple of questions after you shut down, Mark, okay?
Okay, well, thanks everybody out there. Get out and vote. Good luck to everybody. Hopefully your candidate will win. And if not, as we showed you earlier, it really doesn't matter that much. But good hunting, and thanks for stopping in on Election Day. Take care, everybody.